What's going on, traders? I hope you're all having a fantastic weekend. So we're back at it again with the weekly Forex outlook and reviews, and we're going to be going over 12 pairs, including gold, USD, Swiss franc, some majors, and a couple minors. Now, in terms of January, I just want to say to you that I hope you've had a fantastic month. And if you haven't, please remember there are 11 more months left of this year. There are many more trading days and weeks to go. And what you should be doing this weekend, or at least today if you haven't done it already, is just looking at the results that you've had this month. Say to yourself, what can I tweak slightly just to improve a little bit more next month? Now, for the majority of you, it's not going to be your strategy. It's going to be your psychology and how you deal with your trading, with your emotions. And if you can identify that they are, or this is the main cause for some of the actions and behaviors that have contributed to your results this month, then I'm telling you next month will definitely be a better month. Focus on your risk, not your profits, and I can promise you all your profits will follow. So focus on your risk, not your profits, and I can promise you your profits will follow. So let's take a look at our first pair, which is pound USD. Now, what we do know about the pound is it has been trading at an all-time high for quite some time now. I think middle of the last year or around those times. And what we can see is that price is failing to break above some of these structural highs and some of these structural lows here. Now, when the markets are failing to break below structural lows and structural highs, what you should be doing, especially for higher time frame traders, I mean, this is going to apply to intraday traders, but for your higher time frame traders, you need to identify that this is a range. So your playing field is not going to be as great as a trader who is able to scale down, let's say, to like the hourly time frame. On the hourly time frame, when we're trading this, we know from an hourly time frame perspective that the structural highs and lows in a range are the best areas to be selling from if you're a range bound trader. And then you can increase the odds of your range by taking advantage of the smaller reactions at these levels, so that you can get a tighter stop loss below the key level, not a tight stop loss, a tighter stop loss below the key levels or above the key levels, so then take advantage of a much greater range. And the thing is, when you're on the higher time frames, waiting for the confirmation and evidence, you're probably going to be needing to look for bigger engulfing candles, bigger pin bars, which increases your range, which if it's not part of your plan, you're not going to get the best risk to reward, i.e. 1 to 2s or 1 to 3s, however you decide to trade. Now, what I'm going to do here is just add this. Oh, we can't add this to my favorite list. Okay, that's completely fine. Let's just focus on what we're doing here. We don't need to check ranges. So my aim with this right now is two things. From a higher time frame perspective, I'm going to be waiting for price clearly just to break out some of these structural highs and lows, looking for those retests to then look for those continuations. The behavior of the market, the way it's been bouncing from floor to ceiling, literally just is indicating that the pound is not dominating and the dollar is not dominating. There's a lot of uncertainty that I see here with this behavior. And personally, the best way to trade this is to not trade it at all. But if you are planning to trade it, then what you can be doing is going down to some of your lower time frames, like the 30-minute, 15-minute, 5-minute. And what you want to be identifying here, this is crazy, I don't know why this is not popping up, but what you want to be identifying here is how the markets are creating lower time frame trends. And this is how you'll be able to take advantage of trading some of these ranges here. So let's say you identify a trend, you know how a trend forms on the 30-minute or the lower time frames or period, you're looking for lower lows and lower highs. If the market is trending up, then you're looking for your higher highs and higher lows. If the market is trending down, you're looking for your lower lows and lower highs. And if the market is trending up, you're looking for your higher highs and higher lows. This is as simple as it should be when scaling down. Now, what you first have to identify is where price reacting from first. If they're reacting from the structural highs, where do you expect price to go? Well, clearly back down to some of these structural levels here. Now, if the market starts to create levels within the range, you must mark these off as levels of potential targets or levels where price is more likely going to react to before potentially bouncing and maybe going back to the upside. But until then, this is where I expect the market to go. So for now, on pound USD, my bias is it's super rangy. The first option for high time frame traders or those that are not going to be trading within this range is to wait for price to break out of some of these structural highs, look for a retest and a continuation. If you're trading on the lower time frames, then at the moment the trend is down. From an intraday perspective, you're just going to look for supporting evidence to continue selling this back down to some of these structural lows where we could bounce from. And then if we do start to break some of these lows, then final destination is going to be this major structural low here. That's kind of my bias right now. I couldn't give you a conclusive bias, but I think that works, and that's something I'll be looking for next week. The next pair we take a look at is EURUSD. Now we can clearly see that the structure of this market is also very choppy. What's important when looking at this? Well, we want to make sure that we're taking into account our structural high. Reason being is because price may not break above this level. It can start to consolidate, it could react, it could break through, it could do anything. But that's the most important level right now. Another level that we'd work with is potentially our structural lows here. Now the reason why I say this is because by the time we get down to some of our lower time frames, like the hourly time frame, you'll start to see that the market is ranging. That means that whether you have a buy sentiment or a buy sentiment or a sell buy sentiment, you don't really want to be buying into these levels here where you could react and you don't have the best risk to reward, and you definitely don't want to be buying into a strong key level. What we can say at this stage is if the market starts to break some of these lows, then this is where we're heading to, some of these structural levels here. We could find some reactions around these wick areas where we can see that price has previously reacted to after the break, but I would say that this is our most convenient level that we'll be looking for price to get to if we do break some of these lows. If we start to break some of these highs, then we can suspect the market to get back to some of these levels here. So my plan next week is to identify the overall sentiment of this market, which is clearly at the moment creating higher highs and higher lows. The most, the direction that you'd probably, or more than likely, want to trade this is a break of this high, retest of these structures, and then look for your continuation to the upside. But of course, it doesn't need to do that, so we have to always be prepared for a second option here. So if price does start to break some of these lows where it's held for a long period of time, then you're simply just going to be waiting for a retest of this structure and then a continuation back down to some of these target levels here where we can see price getting back to. So this is the kind of plan that I'll be working with on EURUSD next week. Obviously, market open will create some gaps, etc., but we definitely can start planning our trades in this fashion and then really going from there. Next pair that we'll take a look at is USDJPY. Now we can clearly see here that the yen, and we did mention this last week, the yen was very, very weak, and I mean, we didn't have really a sentiment with the dollar, but if the yen is weak, we can suspect the dollar to be stronger. And look at the markets, we have just literally rocketed to the upside. In terms of what the market's doing now, it's very important for me to identify where the price is failing to break below, and it's also very important for me to identify where price is failing to break above. By doing this, when I scale down to my lower time frames, I can then start making a plan with how I plan to trade it. And as you probably can see here, from an hourly perspective, price has started to range. This means nothing from an intraday perspective, but what this does mean for us is that we can start making a plan. If we're planning to continue buying based on the 4H structure, which is really strong bullish, creating higher highs and higher lows, then the plan would be to wait for price to break above this structure, look for a retest, and then for some sort of continuations to the upside. Now, in terms of targets, we don't have any levels here that we can be working with. And personally, I'm not the type of person to be scaling back all the way to the left. But in terms of looking for targets, that is one of the plans you'll be looking for, or you'll just be simply sticking to your plan of taking a trade and targeting your risk to reward, whether it be a 1 to 2, 1 to 3, or whatever else it is. Now, in terms of the structure, if it starts to break the lows here, I'm not going to immediately jump into sells. I do feel that the market will need to show more evidence of sell sentiment, meaning that 2 confirmations of price breaking structure will be good enough for me, which is a break of this structure, a break of this structure, and then a potential retest to then continue seeing this market go down. If I'm planning to sell this market at this stage, then I'm going to be looking to sell it back into some of these levels as a potential target, because this is where I can see prices reacted to the most. So if I get a retest, this will be the range that I'll be looking out for. As of now, if you're trading with the trend, the structure is up. We are super extended on this anyway, so do suspect the pullback, at least a correction of this move back to some of these lows. And if we do, then you're potentially going to be looking to target some of these higher low levels here if the market does start to sell down. It's really entirely up to you, but I've just given you a thought process to work with, and then it's down to you to use your strategy to think about how you plan to get into these markets. Next pair that we'll take a look at is EURJPY. Again, we've identified yen weakness. This market has rallied to the upside. We've broken previous structural highs here, and we've had a really strong push phase We have 12 hours of information to confirm price hasn't broken below. We also have about 12 hours here, if not more, 16 hours here to indicate price is not breaking above. Based on this information, what I'm going to say to you now is once we scale down, we're going to see a range and we can just adjust our levels to that range. Now, we don't really want to be trading ranges where price is not creating clear bounces from the top and bounces from the bottom. And we don't really want to be trading market structure where there's really low volume candles within the range. So what we're going to be waiting for, if you're trading with the trend, is a simple break above the structure, a retest, and then a continuation. And if the market does break these lows, what's slightly different about this structure, as you probably can see here, is that if we look to the left, there's not much traffic that price can actually find as a resistance. So personally, if this does break some of these structural lows here, it might definitely be a plan to start looking for those sells to correct this push phase, look for a clean push back to the downside, and then we can be targeting some of these structural levels here where we can see prices create some sort of support for about 16 hours. So these are the two plans that I'll be working with on EURJPY moving into next week. We can keep this on the hourly. Next plan pair we'll take a look at is pound JPY. Again, same as really, yen weakness, definitely pound strength. We know that the euro was dominating as well last week, so that definitely should have supported some of your buying opportunities on euro yen, guys and ladies. Just remember what we said last week. Now looking at the structure of this market, to be honest, it is super messy. I don't think it's a pair that I'm going to be working with from a high time frame perspective next week. If I'm looking at the structure of the market, this is kind of the area where I see price reacting to the most. In terms of the structural high, this is an area where I know price is reacting to now. And then in terms of potential targets, I mean, to be honest, if we scale down to the hourly, this is just, look at the volume in these candles, look at the reactions from some of these key levels here. It is pretty messy. I would say you much prefer to wait for price to get out of this area and look for a true directional bias. You could scale down even further if you wanted to, identifying major areas where price is failing to break above and below within the bigger range, so the bigger 4H range. And then if you go down to, let's say, your 30-minute time frame, you can then start trading this like this if you really wanted to. So you'll be supporting where price is failing to break below and above, and then with this you'll be looking for the break and retest. In terms of traffic on the way down, you have a lot of wicks where price could react to, and I mean, geez, it's messy. We're not even going to try and make a meal out of this. I would say to you, it is really up to you. I've given you two options. The best would be to wait for clear directional bias out of the majors, and if you want to trade more intraday time frames, then it's going to be these levels here. Look for your retests and continuations back to some of these key levels, but just know that you may run into some serious problems with the traffic to the left. But this is kind of what I would say I'd be looking for. It looks like this push face to the upside is already being corrected sooner than like euro yen and some of the other pairs that we just looked at there. Yeah, see what you're doing with this one. I just want to make it clear, if you're trading with the trend, you're only really going to be looking for buys supporting pound strength, yen weakness. So you could even be more super patient and wait for price to come back to some of these higher lows or potential double bottom patterns and then look for those continuations. This is choppy. I'm sure you all know that this is choppy compared to what we have looked at previously. So make an informed decision whether you want to trade these pairs. You will have to work harder. You will have to scale down a little bit more. To be honest with you, pound yen is a fantastic pair. I'm not trying to divert you from trading it. I'm just saying sometimes there are just cleaner structures to work with. The next pair that we take a look at is Aussie dollar USD. Now, what we identified last week is that the dollar wasn't showing too many signs of strength. There was a lot of uncertainty, and in terms of Aussie dollar, we can see that the structure of the market there was good news that supported it, good fundamentals that supported it being strong, but it wasn't really holding up, and for that reason we kind of put it on the back burner with pairs like CAD and Swiss franc as well. Now, in terms of the structure, if I'm looking at this from a 12-year-old perspective, I do see this as more bearish than bullish. That being said, I will want to mark areas where price is not breaking below and where price is not breaking above. Now, once I scale down to my hourly time frame here, what I'm going to be able to see is that the market is ranging. So this is very simple. With a range, all I'm looking for price to do is break out of the structure, look for some sort of retest, and then find target areas where price can get back to. So I reckon if this is going to continue selling off, indicating Aussie dollar weakness and potentially some strength in the dollar, then I would be looking for my first trade, which will be a break close below this structure and then a continuation back to the downside. If the market is going to continue pushing up, then of course it's just a no-brainer that we're going to wait for price to clear some of these areas here. And if we do clear these areas, then obviously that will start to indicate bullish sentiment, and then we could target some of these structural highs here. For now, I'll stick to the sell bias based on the structure from the 4H being more bearish than it is bullish. And then obviously over the next 24 hours moving into Tuesday morning, when you should be doing your analysis again, we can see what kind of sentiment we're working with. But as of now, this is what I'll be focusing on Aussie dollar USD. The next pair that we'll take a look at is USDCAD. Now, in terms of this pair, we can see the structure of the market has been pushing bullish, putting in high highs and high lows. The previous level in the market did not make a new higher high. When price pushed up, it failed to make the new higher high, and we can see that this was a very important level where price was stalling at. Now, once we have a level where price is stalling at, what we're looking for price to do is come back to create a range or a double bottom, then give it a second chance of continuing to push up. But with this depletion of this bullish sentiment, price failing to make the new higher high and a strong rally to the downside, it is indicating a potential correction, a reversal, or the fact that CAD is strengthening. So what we do at this stage is we can scale down to our hourly time frame. We can start to identify how price is breaking structure. Once price starts to violate previous structural lows, indicating strong bullish sentiment here, you then can look for the push phase, wait for that to deplete, and then look for your buying opportunities once price comes back to these levels for a retest. Now that's happened already, meaning that when the market's open, there's going to be a gap up or a gap down, which more than likely is going to create a disruption in this structure. So I would say we have first signs of potential CAD strength and a reversal in this market structure. To maintain that, the way I prefer to trade this is I would like to see price break out some of these structural lows to validate this trend that's creating lower lows and lower highs, continue to support bearish sentiment, and then look for a retest of this structure for a potential continuation to the downside. If I'm planning to trade this, what I would do is, because there may be a potential reversal, I would target major levels on the 4H time frame, which means that if we do start breaking the structural levels here, where price is forming some sort of support and wick rejections, and we finally close below these levels, there's a very, very strong chance or high chance that we're going to eventually get back down to some of these lows again. So that's kind of my plan with USDCAD. In terms of buy bias, if the market starts to break back into this level, I know that we're within that range again, and I'd much prefer to see stronger supporting evidence to say why I should be buying. And I think for that reason, the most patient game will be to wait for price to break above these levels to look for a retest. For now, we see strong bearish sentiment, break close below structures, nice retest of previous structures, strong sentiment of bears in the market. To confirm that, a nice break close below these levels here, making sure we're taking out some of these supports where price is reacting to, and then targeting some of these lows. That'll be my plan with USDCAD. Next pair we'll take a look at is Euro Aussie dollar. Now we know that the euro was dominating. We did mention this last week Sunday, expecting the market to continue bullish. There was a lot of corrections in the market, but obviously we can see the sentiment of the market is still showing strong signs of bullish structure here. In terms of buying opportunities, we're going to be looking for areas in the market where price is failing to break above, meaning that price is showing some sort of resistance, indicating a depletion in bearish sentiment. We then need to support that sentiment by waiting for a break and close above. Once we get that break and close above that structure, there's strong evidence that the market can continue to push higher. And based on the fact that we are bullish and the market has broken this structure, my plans would be to see this market continue pushing up. Now, because the market's closed, we are going to have a gap up or gap down, and there's going to be levels in the market where price is failing to break above on an intraday basis. This is one of the levels here, and these are one of the levels here where price is failing, creating that retest and failing to break below. For that reason, my plan would be probably to scale down to like the 30-minute or the 15-minute time frame, identifying the intraday trend, which is making higher highs and higher lows, and then checking my range back to the highs. If we get a break above this structure, then I'll just be looking for the retest and then looking for some sort of continuation back to the upside. This supports the higher time frame analysis. This also supports the intraday trends. This also supports taking a trade only once price breaks a key level and then supporting it with a retest and a continuation. This is kind of the plan that I'll be looking for on Euro, Aussie dollar. How you plan to trade this is entirely down to you traders. But for me, I would say buy bias is the way to go, at least for the next 24 hours until the markets tell us otherwise. The next pair that we'll take a look at is New Zealand dollar USD. Now, as I said, the dollar has been showing signs of strength. New Zealand dollar and Aussie dollar hadn't been showing any signs of too much. And I probably would say to you, this one will probably get the red flag. The markets are still super rangy. We're not breaking these highs here. We're creating levels where prices fail to break the lows. And if we see where price is situated right now, we are in the center of this range. We're not really completing, the pushes to the upside. Traders will start to identify head and shoulders, start supporting levels, finding supporting levels here to take their sells. But personally, what I want to say to you is if the markets do not come back to key levels within a range, it's probably best to let them go unless you really do know how to scale down and look for some of your intraday time frame trends, trades, and patterns. Trends, structures, and patterns, sorry. As of now, let's keep this on the back burner and wait for this one to clear up. Next pair we'll take a look at is Euro New Zealand dollar. I think we're kind of getting the same sentiment here with the New Zealand dollar. Price is not breaking structural highs. Price is not breaking structural lows. As you probably can see here, price has completed the move from the upside back to the downside here. I think this is kind of cleaner to be trading than the previous structure. And one thing I'd be saying to myself in the back of my mind, well, if price is reacting to these major levels, if it's going to continue back to some of these highs up here, then what I would want to see the market do first is break above these levels. This is just range bound trading here. Look for the retest of these structures and then some sort of continuation back to the upside. It was a really nice clean move to the downside. So if we do break above, there's a very clean move back to the upside. And I think this will be the best plan for those planning to trade this within the range. Next pair we'll take a look at is USD Swiss franc. Somebody recommended that I analyze this pair. But to be honest with you, when it comes to Swiss franc, it's an absolute mess. And as you probably can see here, it's still really, really messy. I would say put this one on the back burner until it clears up and you start seeing some of the trends forming. I doubt we'll start seeing this until like the end of March, to be honest with you. The end of February, start of March, if not April. So pick your battles. To be honest with you, this is not one I want to be working with. Now, we suspected this to go down last week. I mean, I guess we wasn't wrong. The market hasn't done nothing. We are still ranging. And I guess until there is some certainty, we're not going to really know where we're going with this one. From an intraday perspective, there definitely were some trading opportunities on gold, but we're not going to get too technical with this. We'll keep it simple from a higher time frame perspective until the trends start to clear up and we know what we're working with. So that's the analysis from the 12 pairs this week. If I'm brutally honest with you, the majors are the ones where you want to be sticking to, looking at pound, euro, USD. The yen is showing weakness, but we could have a correction on that, so just keep that in mind. In terms of pound, we're at all-time highs, so also be very wary of that. And in terms of euro, well, we'll have to see if it continues to dominate. It has been doing pretty well, but we may have a corrective structure start forming at the beginning of January before we have some more rallies. I would say work with the key levels that we have identified with our analysis this week. Look for your key levels to be broken. Look for your targets, support that with trends, patterns, and then execute your trades. I hope you've enjoyed the analysis. I hope you have a fantastic Sunday. And until next time, family, continue to trust the process.